So it's the 2nd of November and we've got 1 day to go before the US elections. And let's take a look at the price action in the market. Let's take a look at opportunities in great companies. And let's take a look at what possibly could play out the day of the election and post-election as far as the stock market is concerned. All right, so I'm looking at the S&P 500 and you can see that after we had that retracement back in, last month we had that retracement, we had a strong bounce of this level. Previous swing high became support, so we bounced off and we never reached a new high. So you can see we almost reached the all-time high and we pulled back again. We've got a second retracement the last couple of days, and on Friday we ended up with kind of like a pin bar. Well, it's not really a pin bar, I call it pin bar's fat cousin because it's got a slightly bigger body than a normal pin bar, but it's got a longer shadow, all right? And it looks like we have found a bit of support again at this level, 3230. So if you look at the charts, you can see that the uptrend is still intact. Now, bear in mind there are three trends to look at: the long-term trend, the medium-term trend, and the short-term trend in the market. The long-term trend is defined by the 200 moving average, the red line, okay? So as long as price is above the 200 moving average, and the 200 is sloping up, it's a long-term uptrend. So the long-term trend is still up. The medium-term trend is determined by the 50 and 150 moving average, which is the blue line and the green line. As long as the 50 is above the 150 and either one is sloping up, it's a medium-term uptrend. So you can see that, yep, the 50 is still above the 150, okay? The green still sloping up, the 50 is flattened a bit, but the medium-term trend is still up. But the short-term trend is down, right? We are in a short-term correction because you can see the 20 EMA, the red dotted line, has crossed below the 50 moving average. So what does it mean? It means that it's a normal correction for now, right? Normal correction on the medium to long-term uptrend. So bear this in mind because this is very important to know later on when we talk about what is likely to happen after the election. Okay, so just bear in mind that we are in a short-term correction, but the medium to long-term trend is upwards. That's right. Okay, so the market is going to open in a couple of hours. What do I expect is going to happen? All right, now, again, we have been in this correction now, this short-term correction for about just about two weeks, right? About 10 trading days. Right now, in the short term, the market looks a bit oversold, which means I expect a bit of a bounce at least today, right? And if we don't get a bounce today, we may go down lower to retest this low, right? The market makers, they like to force the market down to recent lows to take out the stop losses of retail traders. They force it down. We call it a double bottom. They force out the stop losses before the market rallies back upwards. So that could happen. But I'm guessing that we may have a bit of a bounce tonight because, like I said, the market looks a bit oversold in the short term. Now, people ask me, how do you know it's oversold? Well, from experience, you can tell it's a bit oversold. It's like a rubber band. You pull the rubber band, right? It's going to snap up a bit, right? And one way to tell if you're not that experienced is to look at indicators like Bollinger Bands and stochastics or Williams percentage R. So for example, if I throw in some of these, there we go, okay, throw in some of these indicators, you can see right now the price is at the lower Bollinger Band. So every time it's near the lower Bollinger Band, it has a tendency to bounce up, right? It's not always, it could always go down, but it's just a probability. Looking at stochastics, you can see that stochastics went below about 20, 25, so it's a bit oversold around here, right? So we've got two indicators indicating oversold conditions, so there is a possibility that we're going to bounce a bit tonight. And again, if we don't, we may go down a bit more, take out these stops, and then we're going to bounce. Because sometimes indicators may tell us it's oversold, but oversold can still remain oversold for a while before the rubber band snaps back up, okay? So the way I see it, like I said, I expect a bit of, either we're going to bounce from here or we're going to take a slight double bottom. And the way I see it is right after the election, okay, we may have a bit of another, few days of sell-off, we may, but I'm bullish. I see that after the election, we're gonna rally all the way to the end of the year, regardless of who wins the election, right? Most of the time, the market rallies post-election. Now, what's interesting is if you take a look at the last couple of days, the NASDAQ that contains most of the technology stocks have actually sold off a lot more than the S&P 500 for various reasons. One reason is because the NASDAQ or the triple Q ETF, many of the tech stocks are a lot more overextended as compared to the S&P 500. So it's natural that they're going to pull back a lot more, okay? Another reason could be, again, like I keep mentioning, the market seems to be pricing in a Biden win, which is a short-term negative for big tech stocks because of possible increased regulations, for example, right? So that could be another reason why tech stocks are selling off, okay? Now, in the event that the S&P does break this support, okay, and like I said, if there's a contested election, that's the only possibility that's gonna really create some short-term panic in the markets, and that's when the markets could go down a bit more. So if that happens, we've got a contested election, where do I see the markets going down to? Okay, so let me take a look at the weekly candles to get some perspective. All right, so if you take a look at the weekly candles, a longer term perspective, you can see that right now we are here at this previous swing high support there. Can you see that support there? Really nice support at 3230. So if we break that support in a case of a contested election, there's no clear winner and people are really anxious, they are nervous, they're selling off the market. Okay, the next support level would be here at the 50 moving average on weekly candles. That would be 3138. And worst case scenario, the way I look at it, worst case scenario is we could go down to 2995, which I doubt, but again, anything could happen, right? So whether it trades down to 3138, 2995 in a case of some panic selling, contested election, regardless of that, when it's finally resolved and we have a clear winner, I believe that we're gonna rally all the way back up. Hallelujah, all the way back up, okay? So that's how I look at it. Again, no one can predict the future, so as an investor or trader, we prepare for all eventualities. But we take a probabilistic view of where we think the market may go. Now, what's been interesting is, right now it's earnings season, and companies have been announcing earnings, and my MAGAF stocks, right, Microsoft, Apple, Google, Alphabet, Amazon, and Facebook have announced earnings, and the earnings were fantastic, especially Alphabet, Google. So they all reported blowout earnings way beyond expectations, and because of that, I have raised the intrinsic value of most of the companies that I own. So the valuation has significantly increased because of the results they have shown way above expectations. But what happened? That's right, the stock sold off, right? So Facebook has been coming down, Amazon coming down, Microsoft coming down. So people say, hey, earnings were great, they're making money, they're growing, why is the market coming down? Because in the short term, the stock market is irrational. It's purely emotional. It's driven by short-term news and emotions like elections and so on and so forth, right? But over time, because these companies are producing more profits, more cash flow, the stock price will eventually go higher in a month, 2 or 3 or so. So this short-term sell-off in these MAGAF stocks, to me, is a great opportunity to buy more shares. So I've nibbled a bit in the last few days, but I'm looking to buy a lot more if they go down further, okay? Now, if you are subscribed to the Ultimate Investors Playbook, there's a subscription where you get to mirror my portfolio, where every month I do a deep dive research into the best investment opportunities in the world. And in fact, this month, my deep dive research was on Ant, which is the Ant Group IPO listing in Hong Kong and Shanghai, the biggest IPO in the history of the world, all right? So if you're subscribed, you get my deep dive research report, you know my valuation for Ant, as well as other stocks. And what I do as well every month is that I tell people, or my students, they get to see my live portfolio. They get to mirror my portfolio, my live buys and sells, and I tell them where are the potential buy points that I'm adding shares to in my current position. So I'm going to give you a sneak peek of my Ultimate Investors Playbook monthly videos, right? So this is a sneak peek to give you an idea of how I identify buy points for the fundamentally great companies that I have bought, okay? And again, these companies are undervalued. I buy great companies only when they're undervalued and when they've retraced to a strong level of support ready to reverse back to the next impulsive wave. So here's a quick look. Enjoy it. All right, so it's the 1st of November and it's time to do our portfolio review. So as usual, these are the stocks that are already in my portfolio and I'll be doing a review of where I'm going to add more shares to existing positions. Sometimes the best stock to buy is the one that you already own because it's a great company and you want to add shares over time. Now, what's really interesting about this review is that right now it's earnings season, so companies are announcing their earnings. And we've just had earnings reports from our MAGAF stocks, Microsoft, Apple, Alphabet, Amazon, and Facebook. And what's been interesting was that many of them blew out earnings, right? It was a lot better than expected. So for many of the companies, you'll find a significant increase in their intrinsic value, okay? But at the same time, notice that they announced great earnings, but the price has been coming down. So why is that, right? That shows you that in the short term, the stock market is irrational. It's illogical. So sometimes a company can have great earnings, stock price goes down. Earnings suck, price goes up. So don't read too much into why did the price go down. You know, in the short term, prices are purely irrational. It happens for millions of reasons: manipulation, algo, robot trading, whatever it is, right? So one theory, of course, is that the market is selling down, tech stocks are selling down prior to the election because that's normally what happens, right? Especially if they expect the incumbent to lose, market tends to sell off, and then after the election, it will then bounce back up again. So this gives us a great opportunity as investors to, again, add shares of the companies in our portfolio that we know are doing really well. Because again, remember, when you're buying a stock, you're not buying a lottery ticket that you're going to guess where it's going to go. You're buying a piece of the business. So you got to understand the business. As long as the business does well, the stock price is going to do well over time. So we're going to begin by looking at the stocks in the US market. So these are the ones in my Think or Swim charts, right? And later on, we'll look at the ones that are listed in Hong Kong and in Singapore for some of them. And those are the ones that I look at the trading view charts. All right, so let's begin with the US one. So first, we have got Microsoft, just announced earnings, great earnings. So the intrinsic value is between 235 to 243. So currently at 202, significantly quite undervalued, but we want to look at the charts as well. Like I said, most of the tech stocks sold off, retraced, and you want to buy always when there's a retracement. You want to buy when there's fear, you get a good price. Okay, so what are the levels you want to buy at? You want to buy at support levels because at support levels, there's a high chance the price may reverse from there. But again, you never know if it's going to break the support and go to the next support. So again, I emphasize every month when you add shares to your investments, never buy at one time. Always buy in stages, dollar cost averaging. Because you never know where the absolute bottom will be all the time. So always save some bullets to buy more if it happens to trade a bit lower, right? So right now you can see Microsoft has pulled back, and if I didn't have any shares, I would definitely want to add shares right now because again, it's undervalued. It is at a level of support. On the weekly candles, you can see I've drawn these support levels based on the moving averages that you can see previously had strong support, right? You can see that every time the market breathes in, it could be a shallow breath, deep breath, or really deep breath. And this happens during a bear market. Bear markets happen once every 5 years. So that's a bear market. Okay, so don't expect that to happen for another 5 years. I mean, it could happen sooner, but it's very rare to get down to that level. Okay, usually we have got short breathing in and deep breathing in. So you can see that for Microsoft, for example, during the shallow breathing in, it finds support at the red dotted line, right? The 20 EMA. So where we are there right now, we're a shallow breathing in, so definitely a place to add shares right now, right here. Now, could it have a deeper breathing in before election or after election? Sure, why not? So another possible level it could hit would be the blue dotted line. That's the second level at 192. Okay, so for Microsoft right now, I'm just looking at two buy levels. Okay, 205 and 192. We are now at 205. I already have quite a lot of shares of Microsoft, as you know. I've got a fairly sizable position, so I'll probably add more at 192. But again, if you don't have a position, it makes sense to start adding right now at 205. Okay. Next on the list, we have got Alphabet. And again, notice that stocks are all different. They are like different people. They have different characteristics, right? So we have to look at historically what has been the pattern of that stock to make an intelligent decision of where it may retrace to and reverse. Now, Alphabet had the best earnings among all the MAGAF stocks. So intrinsic value has been upgraded to 1,008 and Morningstar has upgraded it to 1,980. Really increase in intrinsic value. So looking at the pattern, where would we add shares? Again, fundamentally, it's undervalued right now already. Okay, but right now it's kind of like here. So as you know, I never like to buy during a breathing out. I like to wait for a breathing in to buy. Again, I never like to chase the girl or chase the guy, let them come to me into my arms. Okay, that's what I like to do because I like to get the best price. So you always buy when there's fear, when there's uncertainty. That's when the market comes to you. Never buy when there's optimism because that's when you have to chase the market. So I never like to chase the market. Okay, so where are my buy levels? Well, let me look at the weekly candles, and you can see I would place buy levels at 1534, 1422, and 1287. These are my three buy levels. Okay, so currently it's at 1006. So I'll wait for it to come down to 1005 to add shares. If I didn't have any shares, again, I have a lot of shares of Alphabet, so I'm only going to buy if I get a better discount. So for me, I'm looking at 1004 to add more shares, and of course 1287 if it gets there. It's not easy to get there. It needs to really drop a lot to get there. We need a big panic, right? So unlikely it's going to get there, right? I'm lucky if it gets to 1004. It may not, right? So again, if I didn't have any shares, I want to start adding 1005. There'll be a good deal already. Yeah. Okay, Johnson & Johnson. Okay, this one's retraced to a very nice level. Intrinsic value 147 to 155. Okay, so you can see right now it's retraced to a buy level 137. It's currently as a buy level, another buy level right below at 135. There we are. So great level to add right now. Alright, so I hope you enjoyed that sneak peek into the Ultimate Investors Playbook monthly portfolio review. And like I said, the market sold off in the last 2 weeks, so opportunities to again buy great companies at discounts. At the same time, the sell-off has made my VIX trade very profitable. For those of you who have been following my videos as well as my monthly newsletter, I mentioned this many times, especially last month when I said, hey, the VIX or the volatility index was at an all-time low at the support level over here and would likely rise as we move towards the elections because the VIX rises when there's uncertainty and fear. So at the 2023 level, I was buying a lot of VIX call option spreads, and so my students were following my trade calls. And sure enough, on Q, hallelujah, you can see the VIX has now spiked to above 38, which I expected as volatility and fear increases towards the election. So I've recently taken profit on all my VIX call options contracts. And people say, hey, but Adam, couldn't it go higher? Well, it could go higher, but you never know. I already made like double my money in a couple of weeks, so I'm just getting out to take profit. So even if it goes up higher, well, so be it, right? But you never know, right? Right now, it's gone up to about 39, which was the recent high, and a great place to take profits. So you can see my Telegram chat group in the Ultimate Investors Playbook. This was my trade, which I called, and I exited the trade as the VIX spiked to above 35 yesterday. I took profits on the VIX call option spreads that I bought at the lows of 20. So I made over 100 to 200% returns on that hedging trade. And the funny thing is, there are a lot of my students who made so much money from there that one of them, Derek Bakewell, not sure where he's from, I think he's from the US. He said, "Me too, thanks for that tip. I paid for all my courses on that one trade. Thanks for all your knowledge and guidance." So this guy bought all my courses, right? Options and investment and trading. He spent a lot of money investing in his education, made it all back in that one trade on the VIX contracts. So, the best thing to do is to invest in your own education. You always make it back multiple fold. Right, finally, let's take a look at how the stock market is likely to react on election day as well as post-elections. And again, the best thing to do is to take a look at history. How has the market reacted historically in the last, let's take a look at the last 5 elections, shall we? Over the last 20 years. So going back 20 years would be the year 2000. And this was Al Gore versus George Bush, and it was a contested election because it was so close, and the same thing could happen this year. All right, so this was the 2000 elections, George Bush Republican versus Al Gore Democrat, and the Bush was eventually the winner of the election. Okay, so you can see I've circled, right, this candle over here. This was election day, so you can see that before election, a market went up for a couple of days. Election happened, because a lot of people ask me, hey, is the stock market gonna crash on election day? Is it gonna gap down? Is it gonna gap up? Well, based on history, it has rarely, if not ever, done that, right? So you can see there was no gap on election day. It was merely just another trading day, okay? So it was higher than the previous day, and the next day went a bit higher, and what happened after that, right? The market rolled over. Now, bear in mind that this was during the dot-com bubble crash that was already going on, okay? So bear in mind that even before the elections, the stock market trend was already in a bear market downtrend. So look, you can see the 50 moving average, the blue line, below the 150 moving average green line, and they're both sloping down. That tells us it's a medium-term downtrend. At the same time, the price of the S&P is below the 200 moving average, and the 200 is sloping downwards. So it means that long-term downtrend, medium-term downtrend. And sure enough, what happened post-election? The market continued going down. So what's my point? My point is, where the market goes after the election has nothing to do with the elections. It's got to do with where the trend has been in the first place. So if the market trend has been down, the market will keep going down. If the market trend has already been up, the market will keep going up. And I'm talking about the medium to long-term trend, not the short-term trend. Let's take a look at the next one. So the next one was 4 years later, 2004. So this was George Bush in his second term versus John Kelly. Was it John Kelly? Is his first name John? Yeah, I think it's John Kelly, right? So again, Bush, Republican, Kelly, Democrat, and again, Bush won his second term. So what happened during this election? So again, election day was here. This was election day. And the next day, yeah, we had a bit of a gap up. If you call that a gap, it was a bit of a gap up. Okay, so moving to election, the market rallied to election day gapped up slightly, and the market then continued going up. Why? Because again, going into the election, the market was already on an uptrend, right? So it's just following the trend. So you can see here again the 50 moving average above the 150 moving average, and the price above the 200 moving average. Okay, so like I said, the market just follows the preceding trend, regardless of who the hell wins. Okay, now 4 years later, 2008. This time it was John McCain versus Barack Obama. So Republican versus Democrat, and of course Obama won. So again, this happened during the subprime financial crisis that was already going on. So the overall trend was Down, that's right. We are already in a bear market. Okay, you can see the 50 moving average, blue line below the green line, medium-term downtrend, price below 200 sloping down. So the overall trend is already down. Regardless of who the heck wins, the market continues the trend. So you can see before election day, on this day, market rallied towards election day. After election, what happened? Market rolled over and continued the trend going down. Okay, 4 years later, Obama defended his second term against Mitt Romney. So Mitt Romney, Republican versus Obama, and we know Obama won his second term. I remember at that time a lot of Republicans were saying if Obama wins again, the market's gonna crash, gonna die. Well, it didn't really happen, right? And everyone likes to scare each other. So what happened? Market sold off before election day. Okay, and that was election day. This red candle, that was election day. Okay, after election day, it went down for 1, 2, 3, 4, 5 more trading days, and then hallelujah, it went all the way up. Why? Again, what was the trend going into the election? What was the overall trend? Uptrend, right? You can see again the 50 moving average, the blue line above the 150 moving average green line. Okay, going to election. So the medium-term trend was up. Now some of you would say, hey, but the price was below the 200 moving average. Is that a long-term downtrend? No, because the 200 moving average, the red line, is sloping upwards. Okay, remember, when the price is below the 200 moving average, but the 200 is still sloping up, it's still a long-term uptrend. The 200 has to slope down to confirm a change in trend, which it did not. So sure enough, the market continued the trend that was already before the elections. Okay, and of course, the last election before this one, 2016, when Trump won his election against Clinton, okay, what happened? So that was election day. Market sold off before election day. There was election day, this candle over here. Next day, market went up and hallelujah, market rallied. Everyone said if Trump wins, it's going to crash. Again, no one can predict the future. So forget what people are saying on either party. Okay, because both parties will say the market is going to crash if the other guy wins, right? So forget that. What's the overall trend? Again, the overall trend was 50 moving average above 150, blue above green, price above 200, overall trend was up. After election, regardless of who wins, hallelujah, we continue the trend. There we are, never fails. Finally, can the recent stock market action, price action in the last couple of months predict who the election winner is going to be? Maybe. Well, let's take a look at an interesting historical statistic. Okay, now since 1945, when the S&P 500 fell in the 3 months leading up to the November election during the presidential election year, the incumbent president, which means the current president of the party, has lost the election 88% of the time. However, when the S&P 500 rises during the 3 months before the November election, the incumbent party, which means the current party or president, has won 82% of the time. So in other words, November's the election. Now, 3 months before November would be August, September, and October. These are the 3 months. So historically, from the beginning of August to the end of October, if the market has been negative overall for the 3 months, what does it mean? The incumbent president or party would lose. But if the 3 months was positive, the incumbent would win. So what is it this time? Before I reveal the answer, let's take a look at all the last 5 elections in the last 20 years to see if this has worked out. Okay, so let's begin with the year 2000. So this was again Bush versus Gore. Okay, now who was the incumbent? The incumbent was Al Gore. The Democrats were the incumbent party, and Bush was the new party coming in. So what happened? Now this candle over here, this is the November election. So we look at the previous 3 months, which is starting from August, September, and October. So if you look at this candle, the market opened here at the base of the bullish candle and closed here. So it closed slightly below the open, which means the 3 months before November election was actually negative, slightly negative. And hence, the incumbent party, which were the Democrats, they lost the election, and hence Bush won. So it worked for the year 2000. Now let's take a look at 2004. Okay, there we are. So 2004, by the way, I'm looking at monthly candles. So each candle represents 1 month, as you can see, okay? Okay, so this is the November candle. And the 3 months leading up to that would be this August, September, October, okay? So in the 2004 elections, this was George Bush was the incumbent president, the current president, who is a Republican, and he had to go against John Kerry, who was a Democrat. So what happened? You can see that 3 months prior to the election, the market opened here and closed here. So it was positive, and hence the incumbent Bush won the election. So again, it worked in 2004. Now let's see, did it work in 2008? So in 2008, this was during the financial crisis, right? So 2008, George Bush had finished his 2 terms. It was now McCain versus Obama. So let me just write this down. So this was John McCain versus Obama. And McCain's the Republican, who is the incumbent president. Obama is the Democrat, who is coming in to challenge the incumbent. So again, where was the November candle? 2008 November. It was... This was the one. This was the November candle over here. That's right. So 3 months prior would be here. 1, 2, and 3. August, September, October. So the market opened over here and closed here. So it was a negative. Hence, the incumbent, the Republicans, lost and Obama won. It worked again. Wow. Very powerful statistic. So this was 2008. Look at 2012, the next election. So 2012... was here, and let's see, where was the November candle in 2012? November, there we are. That's the November candle. So that's the election month, okay? So again, this election was, the incumbent was Obama versus the challenger, who was Mitt Romney, the Republican, all right? So again, 3 months before the November election would be again August. Let's see, yeah, August, September, October. So the market opened here and closed there, right? So it went up, it was positive. Hence the incumbent, Obama, won the election again. So it worked again, right? So you can see it's a very powerful statistic. Now, the last one, 2016. Let's go to 2016. Oh, okay, so 2016, where was the November candle? Let me just look for that. November. There we are. That's the November candle. Okay, so this is the election day. And 3 months prior would be again August, September, October. So you can see from the beginning of August, market opened there and closed there. So it went down in 2016. Now 2016, it was Hillary Clinton, Democrat, versus Trump, Republican. And so Clinton was the incumbent party, right? Because before that was Obama, so it's the same party, incumbent party. So you can see market went down before November elections, which means incumbent losers. So the stock market actually predicted that Clinton would lose, even though the polls said that Clinton would win. So what are the polls saying now? Now they're saying that Biden's going to win, right? But what's the stock market saying? Because the stock market seems to be really good at predicting the presidential elections. So let's take a look right now. Where are we right now? Okay. So we just completed October, right? So this is August, September, and October. So November just started, which is election month, okay? Now, who's the incumbent party? The incumbent party is Trump. Okay, and the challenger is Biden. So in the last 3 months, did the market go up or go down in aggregate? Oh, let's take a very close look. So from the beginning of August, if I put my mouse on this candle, the market opened at 3288. As at end October, the market closed at 3269. So it shows that from the open to the close, the market went down slightly 3 months prior to the election. So based on the stock market prediction, I'm sorry to say to Republicans and Trump supporters that Trump is going to lose. Now, this is not my prediction. This is not my opinion. This is the stock market statistic. So the polls are saying that Trump's going to lose. The stock market is saying that Trump's going to lose. So if Trump really wins, it means it's a miracle. And it only means that Trump is God or the devil. Thank you for watching. I'll see you on the other side. And no matter who wins, we are still friends. So if you want to be the first to get my next video on YouTube, do click the subscribe button right now. If you want to check out my online courses, go on to piranhaprofits.com, where you can enroll in our professional Forex, stock trading, options trading, and value momentum investing courses, where you're going to learn how to trade like a professional and generate an income anywhere in the world. If you would like to come to Singapore to attend my live classes, Wealth Academy, go on to wealthacademyglobal.com. It's Adam Khoo, and may the markets be with you.